Hi, I'm TK, the retirement guy at 401tk.com. If you've got an IRA, 401k, or 403b account and you're feeling uncertain in today's economy, you're not alone. It's normal to feel cautious when headlines contradict each other. The good news, I hope, is you landed right here with me, the bald-headed retirement pro with an up-north accent, standing by the beautiful Lake Superior, helping you breathe easy as we make sense of retirement investing together. At 401tk.com, we're focused on clarity. Simple, honest updates to help everyday hardworking people stay informed and retirement ready. That's why we create retirement reviews like this one from October 1st, 2025, which is broken into 4 key parts. First, what's been happening in the economy? Next, why some experts are sounding cautious. Then, why other investors, perhaps like me, remain optimistic from a mid to long-term perspective. And finally, a clear, honest summary to help you feel more confident in your retirement investing decisions. Please note that this video is intended for educational purposes only and should not be considered investment advice. Now let's jump in. Let's begin by framing up what's been happening in the economy. Unemployment is currently at 4.3%, which is just above the Fed's long-term target of 4.2%. Inflation is at 2.9%, which is also slightly higher than the Fed's long-term target of 2% even. And the S&P 500 is trading at a price-to-earnings ratio of about 27, which is well above historical averages. Importantly, in September, the Fed made its first interest rate cut of the year, down 25 basis points or 0.25%. And they're signaling for up to 2 more additional cuts yet this year. We'll come back to why these rate cuts are important here in a moment. As always, in our Reasons to be Cautious segment, a reminder that we don't share these points to create fear or panic, but to help keep your investing strategy grounded. That said, the reason some analysts are expressing caution is they're watching those economic indicators that we just discussed. For example, unemployment rates are showing that job growth may be cooling slightly. Inflation remains relatively sticky. And with the S&P 500 trading well above its long-term average, some experts worry that investor expectations are getting ahead of reality. In other words, those companies will need to deliver very strong results in the quarters ahead to justify current investor optimism, and that's not guaranteed. And even though the Fed cut interest rates in September and are signaling for additional cuts ahead, it's important to remember that rate cuts aren't just about boosting growth. They may also be a precaution or a way to cushion the economy in case things slow down further. The key point from this segment is markets move in cycles, and even strong economies face bumps along the way. The caution you're hearing us talk about is about managing risk, not predicting disaster. Now that those cautions are out of the way, let's chat about why many investors, myself included, feel rather optimistic from a mid to long-term investing perspective, which can really be summarized in 2 words: technology and innovation. Did you know that a very small handful of companies, known as the Magnificent Seven, make up roughly 1/3 of the S&P 500 index total value? The S&P 500 of which is generally recognized as the largest 500 US-based companies, which means the remaining 493 publicly traded entities from the index, including some of the biggest names in healthcare, energy, finance, and manufacturing, they collectively make up the remaining 2/3 of the S&P 500 index. That's a lot of concentration in just 7 big tech companies. Related, here's a headline that caught my eye last month that you should be aware of too. In September, Elon Musk made a $1 billion with a B. Let me repeat that. In September, Elon Musk made a $1 billion insider purchase of one of those magnificent 7 stocks, Tesla. That's not just the biggest of his career, it's one of the largest insider buys we've seen from any CEO, period. Which seems to reinforce the idea that while prices may be elevated today, some very successful investors like Musk believe that tech-focused valuations still have room to grow, especially as AI becomes a bigger part of everyday life. Of course, with all new industries, innovation brings the potential for new governmental regulation. Fiduciary advisors like me are watching closely as new regulation can shape how those companies are allowed to operate in the future, which could have an impact on the stock market. All right, we have covered a lot of ground here today. Let's recap with my 5 key takeaways from October 2025. First, I believe that we're in a moment of transition from stimulus or too much stimulus and tariffs to AI and automation. Yes, growth may slow, and yes, some prices are high compared to historic norms, but that doesn't mean we're heading for a market meltdown yesterday. Rather, it means we need to stay focused, stay informed, and most importantly, stay diversified. Next, AI, tech, and innovation aren't just buzzwords, they're literally reshaping how we work, live, and invest. And if you think people like Elon Musk, who's betting big on the future, that you like their ideas, that might mean that today's market uncertainty may be tomorrow's investing opportunity. And remember what we said earlier about interest rate cuts? If the Fed follows through with more rate cuts, the real estate market could start moving again. And if that happens, it could ripple through the economy in a very positive way. And if you're still feeling cautious about your investments in today's economy, keep in mind that if you've been following the investing strategies from chapter 3 of my video book series titled How to Retire at 401tk.com, your account should already be diversified to match your age and stage of life. Finally, if you're still uneasy about what diversification means for your IRA, 401k, or 403b account, let's chat. I'd love to help you understand your options and perhaps even explain why an IRA rollover with our team may be the retirement investing peace of mind that will help you breathe easy in uncertain markets like we have here today. Okay, that's a wrap for our October 1st, 2025 retirement review. If you'd like more retirement investing tips like these and more, please like, subscribe, and head on over to 401tk.com. We're here to help. This is TK talking personal finance, not rocket science, 401tk.com.